Hey guys, it's Kevin with Watchhimtrade.com. I wanted to take some time to talk about special orders that you can use on your platform to help make your trading easier. So first thing I want to point out is this is a simulation account. You can see in the blue box here it says trading sim. I am not using a live account right now, but this is live data. This is real-time market data, but obviously buying power 5.8 million, close P&L, I'm down 43,000, so I'm getting poor on paper. But nothing you see here is going to be actually real trades. I put it on this simulation model to walk through the orders and show you guys some of the things you can do to help you make your life easier. So first thing I want to talk about is this order right here, this attach OSO. And what does that mean exactly? And walk through how to use that and how I use this. So attach OSO, what that means is OSO stands for order send order. So say I wanted to buy some Amazon, let's get 430 puts pulled up here. Say I wanted to buy some Amazon 430 puts. I'll just buy one of them. And I want to buy them at $3.50. But I want to attach some orders to that. So what I could do is I get all these options here. This says exit, break, and it's 1L, that's one at a limit, and 1S, that's one at a stop market order. So this is the most common one that I use. I find it to be the most helpful. So what I would do, I would select that, I would check the box, and then I would go in here and I would set what I want my limit price to be. So the top one, the limit that says opposite of primary, this is going to be my sell order to lock in profits. I'm going to make this 80 cents. I want to sell for profits at 80 cents above my order. And then my stop market order, this is where I'm going to stop out if the trade starts to go against me. I'm going to make this 40 cents. So I've got a 2-to-1 risk to reward ratio here on my setup. So I click OK, and now my limit price is at $3.50. I put the buy to open order in, and what you see here is 3 orders. Number 1, simultaneously there's the buy order at $3.50, but then number 2, there's automatically a stop placed at $3.10, and number 3, there's automatically a limit placed at $4.30 to lock in profits. And if this order at $3.50 fills, these 2 orders will automatically trigger and get placed. And you can see how this shows up in my order screen here. You can see I've got the buy to open, and then I've got 2 secondary orders that will be triggered from that. And this is really nice because maybe, it's the middle of the day and I don't want to keep watching the stocks, but if I can get a fill at $3.50, I'll take it, but then I don't want to have to continue to babysit it and see if I'm going to get stopped out. I want to get on with my day, or maybe I've got other work to do. Maybe I've got a full-time job and I need to get to a meeting or something like that. It's good because now I can just have my order in here, and it might fill at $3.50 again, though it's just paper trading right now. And I can just leave, and I know that if it goes down, I'm protected. I'm going to get stopped out at $3.10, and if it goes up, I'm protected. I'm going to get an exit at $4.30. So my paper trade did just fill at $3.50, so now you can see both of those orders have been triggered, and whichever one fills first, then the trade is over with. So that is the OSO order, and there's other options here. You can sell along the way up. All right. So for instance, let's do this. I'm just going to close out of this paper trade just so I can show you guys another example here. All right. So again, I'm going to place an order. This time I'm going to place it at $3.40, and I'm going to attach an OSO. But this time I want to keep some exposure. and I want to sell on the way up. So now I've selected the exit, but instead it's 3L with 1 stop. So I get to put in 3 limit orders with only 1 stop at each one. So I can take, if I buy 3 contracts, it'll just sell 1 at a time. I can put my limit order, again, 80 cents on there, and then let's put 40 cents here. Let's put the second one, let's put the limit price at $1 higher and still go with 40 cents. And then let's put the last one at $1.20 higher and still put my sell at 40 cents stop loss. So I've set those settings. I'm going to raise my contract order to 3 because I have to have a higher amount of contracts in order to use this option. I place my order, and now you can see there are 3 orders to stop me out at 285 because I placed my stop all at the same prices. But when it comes to taking profits, I've got 3 separate orders spread out. I've got 1 at 405, 1 at 425, and 1 at 445. This way, I can sell on the way up into my target and lock in profits on the way. I'm not selling everything all at once. And then they have a 2 option as well if you just want to do it with 2 contracts. So OSO orders, very, very, very useful. I actually used one last week. They're also very useful for if you want to focus on one trade but you want to get in on something. So like right now we've just made some good bounces and Twitter looks like she is starting to rally, okay? So I want to buy a dip on Twitter, but I want to keep my eyes on Amazon, and I want to be able to trade Amazon actively. So what I can do is I'll attach an OSO order to my Twitter idea, just putting the profit at 40 cents and the stop market at 15 cents. That's the puts. I need to look at calls here. So let me get these calls going. Again, using the OSO. Alright, so looking at the 38 strike calls, I like Twitter versus 39.25, so there's a little bit of premium on these. So I'm going to put a bid at $1.36. And you'll see I place the buy to open, and then again right away, so my order's in at 136, and you'll see, so there's my order at 136, there's my automatic stop loss at 121, and there's my automatic profit at 186. So now I can leave that in there. I don't have to worry about Twitter anymore because it's either going to fill or it's not going to fill. And now, I want to make some day trades, some active ones. I can look at Amazon right here and I can say, all right, Amazon's moving. All right, I want to buy puts right here with no OSO. I just want to buy them. So trying to buy some Amazon puts, again, paper trading to show you guys these orders. And now I can watch Amazon closely, and I'm not worried at all about what Twitter is doing because Twitter, I've got the stop loss in and I've got my profit target in. So I just let Twitter do its thing and I can go focus on my other plays. So that's where OSO orders are very useful. Number 1, extremely useful for if you want to watch other stocks while still keeping a potential setup intact somewhere else like I just showed you on Twitter. Number 2, extremely useful if you need to run out, and you still want to make a trade though while you're away from the desk. You place that order and you can get filled and not have to worry about, am I getting stopped out? Is it going up? How many times are you out not following the market and you're constantly checking your portfolio or your quotes from your phone, wondering if you need to make adjustments with it? Well, using OSO orders, you don't have to do that at all. It makes life very simple. In my next video, I'll show you what to do when you are in a trade, don't want to get out, but you need to go somewhere using the OCO order. So we went over OSO. Next one, I'm going to show you OCO.